Hello, today is the 14th day of November 2012. It is a Wednesday. Quick look at the silver market and the Toronto stock market. We'll start with silver. Possible failed breakdown, possible failed. We're holding up really well with a nice setup to go higher. What's the failed move going to be? If this breakdown is a failure, I'd expect a fast move up to really this previous support level at least. If this holding above the 18 average of highs, making the average go higher, looking like a great bullish setup is coming in. If this is a failed move, I would expect to move down towards in here. We'll see how this thing plays out. Silver on the monthly chart. First I want to go over is these upper and lower bands, which are very similar to Bollinger Bands within calculations and how they are worked. Therefore, you got this major indecision period. You're holding up amazingly well within the 23.6 and 14.6 Fibonacci retracement to the downside. That's very bullish, yet it's very neutral. Now, I'm not neutral or indecisive on this whole deal. That's what the charts show. That's because I know how fiat currency is created. It's unfortunate that the vast majority do not, even though they spend much of their life dealing within that particular asset class. Let's move on now to the Toronto stock market on the monthly chart, because I'm going to go over a bit of historical financial advice, but for you, it's not advice, it's just ideas and something I said in the past. That's all it is. Bumbo jumbo's done. Okay, possible failed breakout here, possible failed breakdown. Don't know what it's going to be. Now, the reason why this was a failed move down was because it held and stayed above this line for quite some time. If, of course, this is the failed move, I would expect a fast move over the next few years to break past this level and have a significant break to about 17,000, 18,000. If, of course, this is the failed breakout, I would expect a clear-cut level test below this, but a clear-cut break below maybe 8,500 all the way down to its previous low of 7,500. And now let's take a look at the Fibonacci now on the TSX from point A to point B. We'll do that within the weekly chart. And on the weekly chart, we can see there's the high, there's the low. It's right now holding up on this level in here. Not looking that good right now whatsoever, but if it can hold and stay above maybe 12,000, even 13,000, if it can stay above 13,000 for maybe 2-3 straight weeks, then this thing will be looking good on a bullish setup. So advice I gave 3.3 years ago, I gave it to 2 different people in the same town, to 2 different locations though. I'm going to give advice I gave to my cousin at his sister's wedding, and advice I gave my cousin-in-law at his wife's cousin's wedding 3.3 years ago. The key market items is the TSX Gold Silver TLT. This was a price back then. This was the approximate price today. So my first cousin-in-law, this guy here, all I was talking about was silver, silver, silver. Get into silver, best asset class. It's the only thing there is type deal. His investor type was that of real estate. He buys and sells houses for a living. His case with silver play is over. Time was to buy when it was $5. He got in and out. He got out in 2006 for a profit. I then told him to short TLT when it reached $98 a share. The high reached $131, and the next break low was $87.30. Only an idiot would have lost on this bet had they got in at 98. Looking back at the data and correct Fibonacci math, I see now that 99.75 was the entry point, which was better. I also talked to him about solar energy, geothermal, but his reply was, no way it could work. There is no money in it. Again, most people don't understand how fiat currency is created. Now, the advice I gave to my cousin at his sister's wedding, this was during the nightly dance, and his investor type, he's one of those 401k holders. He's got your whatever regular job that pays very well, has no idea about stock markets, investing, or fiat currency. And I said I could tell you in 20 minutes how simple this bet would be. Give me a call, we'll get this thing done. I did quickly go over some of the stuff, and I said you want to sell around 40% of your plan and diversify it in the following. So you hold on to 60% of your value of stocks, you sell 40%, put 22% of the 40 into silver, 11 of it into gold, and 7% in protection option puts. I said Buy physical silver coins and or bars, 1 10-ounce sizes. Buy physical gold coins and or bars, sizes up to 1 ounce. Even 1/20th of an ounce or 1 grams were great. Make sure, of course, to understand which ones are legit. Educate yourself mainly on the coins so you don't get ripped off. And, of course, you don't get ripped off via price and fake stuff. Take 5 of the 7% of the options and place them all over the place, and then take 2 of the 7% and put them in a hole to place in the months ahead. Because the way I was telling them this is, if you put all your options right off the bat in play, then they're just going to become meaningless as the months and months and months come into play. And place puts that are many, many months, years away, I was stating, and when the markets dive large, sell some of the puts. Use that coin for future puts, and for profit when they do well, you would buy puts on the future when the market's having good bull market runs. From the entry point to late March of 2011, silver went up better than 3 times. Gold went up over 70%. The Toronto stock market went up about 40% up to March of 2011. The puts would have lost on the bets for 1.5 straight years. You would have lost a little bit here and there, but the market, of course, would have been higher. And then when you started to see had this thing going down, that's when the puts would have really cashed in well. So that was basically it. I would say that it's the safest way of playing now, because the way this works out, when you put a small amount within the financial instrument of option puts against what you're playing against, that means when you have this decline, next thing you know, you were buying in puts here, say for research in motion here. Now it's back to here. Maybe you bought a bunch of puts at, say, 33 cents a share, and now you see it at $1.40 a share. Okay, I'm going to sell a bunch of them, and I'm going to triple my bet on this particular one. Oh, the market's up higher. Let me just put some more puts down on RIM, and oh, we got a profit again, or whatever in here. And that's pretty much the nature of that game, is to protect yourself on a mathematical numeral point. But of course, with the fiat currency, as bad as it is, the key thing was in buying physical gold and silver. I would probably say, if I don't know you and I want to give you the best advice I possibly can, I'll say, because I don't know you, I don't know if I'm going to give you the best information, but by having a decent percentage in physical gold and silver is a smart play, in my opinion. Thank you for tuning into today's video, and have yourself a magnificent day. Bye-bye.